Want to pay attention to crude oil because crude right now, at least WTI, is trading at $39.57 a barrel. It has fallen a bit. And to talk about this, but also major news that's taking place regarding Royal Dutch Shell, we invite into the program Todd Horwitz, Bubba Trading Founder, and it's good to see you joining us from Chicago. How you doing?
Great, Adam. Nice to see you.
It's good to see you. And the reason I wanted to talk about this is Shell is writing down up to possibly $22 billion in assets, essentially because demand for oil they're predicting really isn't going to be there in 21, 22, or 23. I think in 2023, they're predicting Brent will be trading at roughly $60 a barrel. What does this mean for people who want to actively trade in oil? And will we see the other major oil companies follow suit?
Well, I think, first of all, Adam, this is a great time, with all the bad things that are going on. As we know, companies like to make the biggest write-downs when there's already so much bad news that it doesn't matter. And I think that these companies have been so beaten down anyways. Why not just write everything off the books now? Now, as far as oil itself, I think there's going to be a lot less usage, a lot less demand, because, again, we can't even get the economy open in full. So how are we going to start to continue to use oil? I think that's an issue. And I also think that we've now starting to see some other developments that may eventually help us replace oil, plus some of the restrictions that if Biden gets in, they could start coming in sooner rather than later. So there's a whole bunch of reasons to look at oil that it should go possibly lower from here. I think the days of $100 oil are over. I think probably we may be up to the 50s, might be as high as we may ever see again. And I think that here, looking at it today, I don't see us getting much past 40 anytime soon. I think that this big rally we had was built on a lot of hope, but I think we're starting to find out that demand is not coming back so fast. So I think I would be looking for lower prices here.
Todd, is the demand not coming back so fast or not coming back at all in the way we used to see it? I mean, we're talking about BP several weeks ago. They had a 15% cut. There's no question, even before all of this, there was a shift that was happening away from fossil fuels. So a lot of these companies have already been thinking about it. And to your point, this is kind of the perfect timing to do the write down. But how much of that demand picture that we saw several years ago, or even in 2019, is not going to come back? And it's not just because of the virus.
Well, I think we should be headed towards other things anyways. And I think that's the right thing to do. I mean, you're seeing this like with Nikola Motors, not a huge player yet, but out there, Tesla, a lot of the cars that aren't going to need fossil fuels. So I think what you're going to see is that demand will start to wane, but we still have big oil is still a big player in the government as well. And until they can get themselves set properly, I think that demand will remain somewhat constant. Again, I don't think that we'll see that major demand that we saw because there are some alternatives starting to show up. But again, until they get their footing, very much like big tobacco years ago, because they're such big contributors, they're going to let them get themselves set up and get involved in this other stuff before they really start turning the pumps off. But I do think demand will wane. But again, the biggest thing right now is the lack of growth in our economy because we just can't get it open, and we're running at about 25%.
Todd, when you said that we will not see $100 a barrel oil again, I was thinking back to 2007, 2008, when they were talking about peak oil and oil would never fall below $140 a barrel. A whole different discussion. But one of the things that's in play in context to that is the big oil companies trying to turn themselves into energy companies and green energy. I realize that is decades down, but even Royal Dutch Shell has said that by 2050, they'll only sell carbon producing energy product to businesses that have carbon offputs. Is this realistic?
Well, I mean, I hope it's realistic, way down in the future. Obviously, I think that we should have been doing more all along. You've had solar power around, you've other things that could have been tried to be more redefined and put into business. But of course, again, this goes back to a lot of the breakdown in our own government, that big oil has got too big of a hand in big government, which did not force them to make some of these adjustments a long time ago. And especially when we got heavily into the shale producing and we became a world exporter instead of an importer, and we weren't being held up by OPEC anymore. It even left oil to be more in play, fossil fuels more in play, because we had access to it very easily. So those are a lot of the issues. But hopefully we will get to a point where we're going to see more of the electronic cars, the trucks, and other things that we use fossil fuels for to burn cleaner energy to save the environment as we go into the future.
Todd Horwitz is the Bubba Trading Founder, and he's joining us from, as my team pointed out, it looks like your oil superhero lair behind you. It's really quite a great shot.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.